currency markets have been very active. So we'll definitely take a look at some of those before we end today. If you have any questions or comments, certainly put them out there as we're going along. Usually we talk about support resistance, supply and demand. Did a little bit of that yesterday. Okay. Why do I focus on the turning points all that much? That much. It's really 99% of what I do. It's simply because if you want to enjoy high probability, low risk, and high reward entries, it all comes down to identifying those major turning points. Those turning points are always going to happen at price levels where you have an imbalance of buyers to sellers. Exactly what that picture looks like on a price chart is really all that matters. Okay, does that make sense? I know a lot of people were here yesterday, so I probably don't need to go too deep into where I come from, but I've been trading currencies for many years. Okay, both in the futures and the Forex. Okay, having started on the floor of an exchange doing currencies. All right, so I did not start, when I started my career, I wasn't looking at charts. Okay, I was looking at order flow, big institutional order flow from banks, institutions, big funds, things like that. So from early on, it was very clear to me what that real supply and demand looked like on a price chart. Okay, a few years later, when all the books and kind of trading hype started to come about, in the late 90s and such, I would start to see things that really just didn't make a lot of sense to me. Things more along the lines of conventional technical analysis. And we have to be very careful with conventional technical analysis, because conventional technical analysis really ignores some important realities of markets. We're going to talk about some of those things today. All right? And since there's so much of that, we could talk about trends, support, resistance. Those are the two biggies. But one thing we never talk about are the classic chart patterns. Okay? Does anybody in here use classic chart patterns? And if so, maybe you can name one or two of them. Anybody use the classic chart patterns? So it looks like a few people do. Things like double tops, double bottoms, triangles, key reversals, things like that. Okay, flags, yep. All right, so there's a bunch. So it looks like a lot of people do. Some people use that cup. Okay. Forex Champ, that's something we cover a ton, and I'll bring a little bit of that into what we talk about today. I kind of get off that topic once in a while just because I think people are sick of me talking about it sometimes. So let's okay, yeah, here we go. Ascending triangles, all that stuff. All right, let's talk. We're going to talk about all that stuff today, and what we're going to do is wrap some of our objective supply-demand analysis around these classical patterns. Okay. Let me start by showing you a little bit of PowerPoint. Okay. Let me start by showing you a little bit of PowerPoint. So can everybody see my screen that I just changed? So now you should be able to see that, right? Everybody see that? And this stuff won't take long. I think you'll get the point real quick. All right. Again, when people go and just read the textbook version of trading, that's what they get, the textbook version of trading, which often has little to do with real life trading. Okay? All right, so here we have a descending triangle on top. Okay, that's a pattern most people are probably familiar with. We have a descending line on top and then a horizontal line on bottom. The trade is when prices decline from that pattern, then you're supposed to get short with your stop just above the high of the pattern, right? High of that breakout. Remember, all these patterns are breakout entries. Okay. So most people will just take that pattern and take that breakout because of the descending triangle. Okay? And it does look like a nice picture there. But that's where most people will stop their analysis. Okay? If you want to take all this to a new level, make sure that before you take your breakout entry to the downside here, that you know exactly where support is below the entry level. Okay, does that make sense? Because remember, all these classical patterns are breakout entries. Okay? Every one of them is a breakout entry. Therefore, the question needs to be, what is price breaking out into? Is it breaking out into resistance when you buy it? Is it breaking out into support when you sell it? Or is it breaking out into more like pretty much clean air? You see what I'm saying? Does everybody get that? Does that make sense? Just making sure everybody's still with me here. So that's what people fail to do. They fail to really look to the left, and that is really everything. So the key words, the key theme of today is, whether we're talking about chart patterns or whatever, the key is look to the left. All right? Yeah. Look to the left. All right, so when prices are breaking to the downside here, just before you push that button to sell short, right, just look to the left. And the area you could see that just precedes the descending triangle, that little rally in price, notice there's really no support in there until you get down to the pivot low, which I've marked off as target 1. So as long as your entry and stop, the distance from your entry to stop, right, or I should say the distance from your entry to your target is at least 3 or 4 times the size to your stop, you're fine. Okay. Said you can't see the chart? We're going to get to the live charts in just a few minutes here. I just wanted to kind of illustrate the point here. Okay, let me grab that for you again. You know what happens? Is sometimes when people sign in after the chart is grabbed, that might be better for you. Okay. All right, I just grabbed it again for you. So not to spend a lot of time on this. Again, the key factor determining whether any breakout trade works or not is looking to the left and noticing what price is breaking out into. That's the big thing with breakout entries. So in this case, you're fine with selling short on that breakout to the downside because support target 1 and target 2 are far enough away to warrant taking that trade. The risk reward here is ideal. Any questions on this one? If not, we'll move along. I know it sounds like a simple point, but it's really everything. I mean, I can't tell you how many people you see on a daily basis lose so much money taking breakout entries and looking at these classical chart patterns without wrapping real, support resistance around it, real demand and supply analysis around that. All right, so here we have another chart. Again, breakout to the downside. Okay, another descending triangle, but here, notice the target is much closer than in the other chart, right? Understand that price is going to break out to the downside. It's going to move lower until it reaches a point where reaches a price level where demand exceeds supply, which is that pivot low over there. Okay, there's a lot of demand over there. That's why you get a pivot low. Okay, so just make sure in this case, this trade may be okay for someone, and for someone else it may not be okay. It all depends on your risk reward. Look to the left. Let me get you another one here. I don't have a lot of these. Yeah, the profit is smaller, Forex champ. Profit is smaller, so again, does it meet your trading plan or does it not? That's the key. Okay? You're going to have, in your trading plan, trading rules, you're going to have the risk reward that's ideal for you. So you've got to make sure that the trading opportunity matches that. I myself don't even focus on chart patterns like this, but if you do, the key thing is where's that support, where's that resistance. Okay, here we have another picture, more of a pennant. Okay, this pattern really just looks like a triangle. In this case, it's preceded by a decline and followed by a decline. Okay, the entry here is to short on a breakout to the downside out of that pennant. Okay. All right. But again, we have to look to the left. And when we do, we see that supports, right, the potential stopping point for declining prices is much lower. All right. Any questions so far? Okay, we'll see. We'll certainly see plenty that failed. All right, that's the key there. Let's get to some other charts. And really, anybody that wants to look at a certain market, just type it in there and I'll pull it up. We could really do this analysis on any time frame. One chart I wanted to just start with here is the yen, and then we'll go to something else. I was just flipping through the chart just a few minutes ago and saw a nice little pattern forming. Give me just a second, I'll grab it for you. Okay. Yeah, sorry about that. Does that sound any better? That should be a little better. Let's take a look here. Here we have, this is just a live chart of the yen. Okay. Notice we have somewhat of a big flag up here. Okay. The play here would be to buy a breakout out of this flag, the green candle that breaks out of there. But notice that here, it appears that we're breaking out into resistance, those gray shaded areas. Does everybody see that? So you may think, well, we probably don't want to take this trade. But for those that have been here a few times and have gone through all the supply-demand analysis, this is a case where it actually may be okay to take that trade, okay? And bring it back to all the supply-demand stuff we talk about in here. Okay, what this chart has going for it is that after the breakout, on the breakout of that flag, okay, we are revisiting a supply level up there that has been revisited a number of times, right? Price has been there a number of times, okay? And let me just show you more activity to the left, and you'll see more of what I'm talking about. See how price has been to that level a bunch of times? Now, each time you come back to a demand or supply level, yeah, it's decreasing. Right. Now, a lot of people look at that as the opposite, but, you know, we keep kind of hitting that point every time we do a session in here. So, when you are revisiting a demand or supply level, in this case, that has been hit a few times, been revisited a few times, you know, odds are you're going to go through it. It's just like chopping the tree, right? It's every time you take a swing, you know, you're removing the mass, so the tree is more likely to fall. Exactly. Exactly. Someone asked a little while ago about false breakouts. Okay, that's an excellent question, and absolutely, let's go over that. It's really going to be the same conversation we had here, but that's okay. All right, let me just highlight a little area for you here. All right, and let me grab the chart for you. False breakouts, excellent question. Again, that's something that happens all the time. You see that happen to people, and it's just because they fail to see or look at what they're breaking out into, right? So everybody see this cluster of trading I've highlighted up here, up in the right, in the shaded area. There we've got a sideways base of trading. A lot of people would look at that and say, okay, and at least at that point, they're either going to short a breakout to the downside or maybe buy a breakout to the upside. Well, in this case, shorting a breakout to the downside would be okay, but buying a breakout to the upside is likely to fail miserably, as it does there, because look what you're breaking out into. You're breaking out right into that prior high. What's over to the left? Is that what you're talking about? I think you're talking about those quotes. Yeah, that's okay, as long as that doesn't bother anybody else. Because I have trades on in other markets sometimes, so kind of keep an eye on it. All right. So does everybody understand my point up here? If you're thinking of buying a breakout to the upside out of that area of sideways trading activity, it's probably not likely to work because you're breaking out right into that 103 pivot high. The reason you have a pivot high there is because you have more sellers than buyers. Supply exceeds demand, right? Okay. So that's the last thing you want to do. But a breakout to the downside, look at the price action that just preceded that sideways base. I'm talking about the big rally in price, all those big green candles. In those big green candles, there's nothing really to stop price from falling. There's no pockets of demand or inventory, right? Yeah, that's another reason, Michael. You know, that pivot high up there has not been revisited a number of times. It's actually the first pullback since it's been created, suggesting there's a lot of sellers up there. So the last thing you want to do as a buyer of a breakout is buy anywhere near where all the sellers are at. Does that make sense? So when we're talking about breakouts, that is the key. Just look to the left and see what you're breaking out into. Make sure you're not breaking out into resistance or into supports. Okay, that's key. Let's take another look here. Show you another example. Okay, here we go. Any time frame, Boyke, any time frame. Anything I ever talk about, just be assured that it's applicable in any time frame, any market. Okay? All right. But you see the big, yeah, it's always a good idea, Forex Champ. Like we talked about yesterday, make sure you look at the bigger time frame. You're just increasing the probability of the trade working out when you do that. Okay, everybody see this big double top up here? Okay. Let me just quickly highlight something for you. All right. Quick question here. How far left should you look? If you look back far enough, you can always find a level that has been used before. Yeah, you really want to start your... the answer is you look as far left as you need to until you hit price. Once you hit price, you know, try to determine whether that's a fresh level or not. And you can start your... I guess the best way to say is you can start your count over from the levels where prices really move strongly away from that level in strong fashion, because that suggests a big supply-demand imbalance at that level. Okay, that's something we covered in one of those recordings too. I'll try to talk about a little bit more today, but sometimes we spend entire lessons on that. Let's take a look at this double top, right? Price revisiting that prior high. Now, does everybody, maybe you guys can, we can make this a little bit more interactive. What's the standard entry for a double top? When do you actually sell shorts? Maybe you can kind of type in some prices here from the chart you see here. According to the textbook, when do we sell short? Breaking of the neck? Yeah. So where might we sell short on this one? You know, according to the textbooks. Okay. Yeah, right around there. Let me try to draw that in for you here. Okay. Yeah, this is kind of a little goofy neckline, but yeah. But honestly, the way the textbooks would do it, probably have you selling short right in here, right? Okay. All right, just drawing in a line right there, and you probably extend that line over to the left. And you know, in this case, it works out fine, right? But you know, you can look at it that way if you really want to. But there's a much better way to do it. First of all, that first high up there, before price revisits that high, okay? That first high up there. Why is that there? Why do you have that first pivot high? Talk about the one on the left. I mean, at the end of the day, what's the only reason that high is created? Yeah, there's too much supply. There's way too many sellers, not enough buyers, right? Exactly. So as a consistently profitable trader that sells shorts, let me ask you this. Why is that where I have the neckline drawn in there? And really, if you think about it, where the neckline is in any double top or double bottom or anything, let's talk about double tops. Where the neckline is, why is the neckline there? Why do you have that pivot low there at the neckline? Why do you have that pivot low there at the neckline? Why do prices bounce up there? Right. Maybe covering, but at the end of the day, even take it before that, Joe. There's demand, right? There's too many buyers, more buyers than sellers. You can't make it any more simple than that, right? So we have our initial pivot high there because there's more sellers than buyers up there. Supply exceeds demand. We have our pivot low in the middle there at the neckline because there's more buyers than sellers. Demand exceeds supply, right? Yet the textbooks tell you to do nothing when prices revisit that pivot high. They tell you wait till you get down to the neckline to sell short. Does that make any sense? When you kind of look at it through, kind of the supply-demand stuff. All right? But that's exactly what the textbooks tell you to do. So as a trader, I tell you go ahead and do that. But as someone in the education world, I'll tell you that's crazy. All right? All right. Okay. Exactly. And I was just kidding with what I just said there at the end, but okay. All right. So when you understand why exactly what's happening kind of behind the scenes with those candles, right? Why you get that pivot high there, right? You should be very excited to sell short if when prices come back up there, rally back up there, okay? Now at that point, when prices rally back up, that second shaded area up there, you don't have a double top yet when prices are up there. But how low risk is the short entry attempt? It's very low risk to sell short up there. And think about remember we talked about yesterday a little bit, think about who you're selling to when prices get back up to that 107 area. You're selling to a buyer who is buying after a giant move up in price and right into a price level where the chart suggests there's a lot more sellers than buyers. Exactly, a novice trader. Okay, it's very low risk to take the other side of that trade and be the seller. Does that make sense? If you're wrong, so what? It's a small, tiny loss. Okay? Johnny, yeah, if you look to the left of that neckline, you see all the price action over there. You just come down and hit that level a ton of times. So, it's okay. It's not the greatest level, right? Obviously, those pivot highs are very strong because you don't get a lot of trading up there, right? Okay. All right, so everybody understand what I'm saying? So instead of taking the textbook version of a double top and just trading it as explained in the books, if you just change your thought process a tiny bit and focus on the reality of what's happening, you're probably not going to be selling short at the neckline. You're probably going to look to sell short when prices revisit that initial pivot high up there. So in this case, if you do sell short on when prices come back up there, and the trade does work out, now think about it. Okay, there's more to this. Now, you're a part of that double top, that picture that everybody on the planet looks at and says, hey, we now have a double top here. It's okay to sell short. Does that make sense? You want to be a part of each invitation in that conventional technical analysis trading book. Okay? If you see the picture of a double top and you see exactly where the rest of the world is taught to sell short, wouldn't it be ideal if you were already in for that picture? See where I'm going with this? Okay. You want to be a part of the invitation that gets everybody else into the market. That's the point. What you could do there, I see a couple questions on exactly where you would sell short. One of the things we do in the live trading room at Online Trading Academy is we simply put a couple lines. We do this in here too when we do all the supply-demand stuff. And we're going to spend 2 or 3 days doing this in Barcelona. We would just put a couple lines around this area up here. That's where the peak supply is, right up in there. If prices came back up there, we'd sell short right at the first line with our stop just above the upper line. Okay. Of course, we would have to make sure that we have a nice profit margin before that. Okay. Selling at 106.50. Now, why would you want to do that? I'm not saying it's awful or anything, but why would you want to do that? Oh, I'm sorry. Let me grab the chart for you. Okay. Yeah, Boyke, if you sell at 106.50, you're selling awfully close to where that little kind of pocket of demand is, around a tad higher than 106. You see that? And you don't want to sell short anywhere close to where the demand is. Right? Does that make sense? Okay. So again, I know it sounds like a minor point here, but remember, the textbooks don't have you selling short until way down below 105.50. So you have to be very, very careful there. Okay? Those pictures certainly sell a lot of books, but I don't know how well they do in your trading account. Okay. Yeah, the trend line break at 106 is a little bit better. Okay. All right. So any questions on the double top? Again, if you think the simple logic through, you'll see that the conventional technical analysis stuff just doesn't make sense. Okay. Let's pull up another chart here. All right, let's start with a clean chart. Let's walk through this one together. Okay. Oh, good question here, Johnny. When are you going to write a book? Yeah, that's what I get that question a lot, and my answer is usually the same. I put some stuff out there, but if you can make money trading consistently, the last thing you're going to do is write a book. Okay. There's some good books out there with some good nuggets of information, but do you think anybody that is consistently profitable on the planet, writes a book and kind of puts their whole strategy in the book? They would never do that. All right. I'm not saying I'm the best trader in the world, but I have a strategy that works for me, and it's worked for a long time, but anyway, yeah, who knows? Maybe in the future. Pippin, good question there. Do you use a limit entry or watch the price action? If you're new to this, I would watch the price action and don't just use limit orders to start. Okay. Make sure you get some confirmation. All right. Okay. Okay. Yeah, absolutely. I'm just focusing on the entries right now, just because the reason why we'll talk about the targets and stuff in a minute, but the reason why I was just focusing on entries today is because of the topic, which is trading the chart patterns, and the topic was actually more as kind of a warning sign and to kind of be careful, because one thing I see in the education world, so many people falling into the trap. So many people fall into is they don't look to the left. They take bad entries. Any question about a stop, about a target, about anything in trading that I ever come across, okay? A lot of people will say, I take good entries, but my targets are bad, or a lot of even more people say I need help with my stops. Well, they may think they need help with their stops, but the truth is they're taking poor entries. Okay, and if you take a bad entry, there's no kind of stop that's going to save you. All right. All right. So we'll get to this chart in just a second. Philip, remember, if this may sound crazy, but and I don't want to stay on this topic too long, but I see your question there. Remember, you don't want anyone else. You don't want anyone else doing exactly what you do. Otherwise, it won't work. Right? A lot of people think that you want everybody. If everybody does the same thing, it's going to work. Actually, the opposite is true. Okay, it won't work. Okay, don't forget when you sell at, and this is a big thing in Forex. Okay, that with brokers. I know we're getting off topic here, but this is an important point. It's a big thing in Forex with in Forex often more often than not the broker's on the other side of your trade, right? So you have to be very careful there. So when you buy at support, okay, the better you get at buying at support, right? When you buy at support, who's selling to you? Right? Who's selling to you at support? When you do that? Not really in Forex. Most of the time, when you buy at support, who's on the other side of your trade? Yeah, the broker, right? You think they're going to sit there and take the loss? Nope. Right? Remember, when you buy at support, you're forcing someone to sell at support. When you sell at resistance, you're forcing someone to buy at resistance. Okay? It's no surprise that when you in Forex, when you do a lot of real short-term trading and you put your entry in and your stop, how often you just get swept right out of that trade. Get your entry, your stop gets hit, and boom, prices take off in the other direction. But that happens quite a bit to very active Forex traders. Okay, there's a reason for that, but that's a subject for another time. Okay. Now let's take a look up here. I'm just going to put some lines in this chart, and then we'll talk through it. Okay. Now, let me grab this for you. Huge liquidity in which market, though, PA? Well, remember, the retail trader is not necessarily trading. The retail trader is typically trading a very small market. For the most part, it's the market that the broker makes for their clients, right? Okay. The average retail Forex trader doesn't trade the big $1 trillion market. Okay. Right. They offset the risk with with your stop or someone else's stop. Okay. They love it. They love the short-term traders that put their get into a position and put their stop real tight. That is a gift. Let me see, Boyke. Why do patterns repeat? Is that the question you're talking about? Sorry about that. I missed that one. Okay. Well, every demand and supply level, right? Every pennant and flag is there because of the prior one's existence. Okay. Take a look at the chart here. Did you see how we we're breaking down out of this little cluster of trading we just had? Okay. Everybody see that on the chart? Those two lines I drew in? It looks like prices are maybe going to break down out of that area. Okay. Now looking to the left, is that a breakout trade we might want to take or no? No, right? Probably it could certainly work, but there's probably better things out there. Okay? Because if you look to your left, and down the price ladder, we've got a little flag or pennant there, right? Okay? So that area could certainly act as some support. Okay? So you have to be very careful with that one. Ideally, you would take a breakout trade when a pattern like that is not there. All right? Does that make sense? Yeah, supports. Okay. Any questions on that one? And this is current price, so keep an eye on that. If you're looking for a bounce in this market, the euro, it's it's likely to come from that little pennant, but again, There's not a lot. This is a situation here. We're just looking at a 5-minute chart, but there's not a lot of room in between your support and your resistance. Okay. Any questions on that? Does that make sense? Okay, let's take a look at another chart here. Okay, here's another one. Let's take a look. Here's the euro, 60-minute euro. Okay. Everybody see that, the euro chart on the screen? Okay. Oh, I'm sorry, the pound. Did I say the euro? Sorry about that. The euro. Okay. The pound. So everybody see that that prior high there, right? The highest point on the chart. Notice that now we are kind of rallying back up to that area. Okay. This is a situation where we spent about 10 minutes talking about a double top a little while ago. Okay. Here's a live example that we may be able to take advantage of. Okay. We put a couple lines in here. Right? Right? This is another example of looking at double tops and all these patterns just a little bit different. Okay? And I just drew some lines in there. It looks like we just, yeah, Johnny, I didn't think so, but when I drew the lines in now, it looks like we already kind of hit that. But, you barely touched it. Maybe if you go back up there again, there might still be a trade there. Okay, but the key is to get short up in that area. Okay? Because look down around the neckline around 174. Do you want to get short anywhere there? Anywhere around 174, 174.25? See what I'm saying there? Absolutely not. Why would you sell it? Why would you sell at support when you could sell at resistance? Yeah. If you sold short when prices just revisited that prior high, and if you were a part of the double top, you would look to exit part of your position around 174.25 at the demand. Okay? So if you were going to exit some of your short position there, right, that means you'd have to buy it back, right? And who do you think you'd be buying from? Who do you think would be the seller down there at 174 for if you were to get out of your short? Probably the guy that's reading the textbook, right? They're just getting into their position, and you're getting out of yours. All right? And I'm not trying to make this sound easy. The whole point with today, I know we're a little short on time, the whole point with today is to, instead of just looking at, technical and on-the-surface kind of technical analysis and all kinds of things like that, start to think about this stuff for what it really is. Begin to look at these candles, look inside these candles, okay? Begin to look inside these candles. Really understand the order flow that's responsible for the creation of these candles. Okay? Does everybody get that? Okay? Make sure you're never selling at support. Make sure you're never buying at resistance. In fact, you want to be doing the opposite. Okay? So we'll keep, each month we'll keep coming back and doing this stuff. And I think it's been a little while, so the next time we do one of these, I'm going to mark it down right now. We'll just do a kind of a brand new refresher on pure supply and demand, exactly what it is, how we see it in the price charts, and all that. Okay? Let me type my email address in here if you need anything. All right. Okay, thanks very much for your time. And hey, thanks a lot. We'll talk to you soon, and hopefully we'll see some of you in Barcelona. Anybody going to Barcelona for the conference? Yeah, excellent. Thanks. So we'll see some of you there. All right. Have a great day, everybody. Thanks again.